Correct.
Chaque équipe dispose de 20 minutes afin de présenter son cas au juge. J'afficherai un carton pour les 10, les 5, les 2 dernières minutes et les 30 dernières secondes de la présentation. Lors des 10 dernières secondes du discours, j'indiquerai à l'aide de mes mains le nombre de secondes restantes. Si vous n'avez pas terminé votre présentation après 20 minutes, elle sera arrêtée afin de passer à la période de questions. Une période de questions d'une durée maximale de 5 minutes est allouée au jury à la fin de la présentation. Veuillez noter que vous ne pouvez en aucun temps dévoiler le nom ou la provenance de votre université.
Bon après-midi, membre du conseil de Eurowind Energy. On est ici aujourd'hui pour vous présenter l'opportunité d'investir dans Blower Farm Energy. Good evening, members of the board. We are here today to present to you the opportunity to invest in Blower Wind Farms. Today, my colleagues and I, Shadouch Ahmed, Frédéric Fortier, and myself, Alexis Van Hameren, will present to you the following opportunity. First off, we'll be going through the current situation, followed by our decision criteria, then all our alternatives, our recommendations, their analysis, and finally our key takeaways. For the current situation, while Eurowind Energy has targeted Canada as a prime market for wind energy, you are in need of expansion, and this is a great place to go because there's advantageous PPA, a power purchase agreement, a strong credit contract counterparties. There's also low wind energy penetration rates and less competitive market. We would almost have a first competitive advantage in this market. There's also potential acquisition targets are blower wind farms from wind movements. Eurowind Energy. We are a mid-sized company focused on development of wind farms in Denmark through developing greenfield projects, acquiring projects in their initial development phase, and then usually selling them off after a 2-year phase, maximizing the selling value due to low remaining operational risks. By that, we would further reduce risk by creating SPVs, special purpose vehicles, and also shield other assets owned by the company in case of loan default, as you may know. So for Wind Movement is a mid-sized company also focused on development of wind farms in Quebec. The development field projects, and they're mainly in Quebec and also going through a different field. We based our decision criteria on 4 main elements. So profitability of the project, if if there's great revenue, but also if the costs are low. Also DSCR is of 1.25. The possibility of turnover after we're through that investment in Quebec and Canada, and also a low equity requirement. Therefore, we came up with 3 alternatives. First off, our status quo. So we're currently very profitable. And do have a large growth. So we could stay status quo and become more knowledge in our own market. Second alternative would be to not acquire Blower Wind. We could continue research and find other opportunities to invest and also expand to more plausible locations. Instead of just Canada, we can look at other locations that do have wind energy. And finally, acquire a Blower Wind farm from wind movements. Because we're comparable companies, we would be able to understand the company very well and also give our knowledge to them. Also, Canada is a prime market right now for the wind energy. And it would be also, as I mentioned, advantage PPA. And there's also a strong credit and contract counterparties. And also, as mentioned, there's low wind penetration rates and less competitive market. So it'd be very easy for us to get in that market with the knowledge we already have. Therefore, we're going with acquiring Blower Wind farms for the reasons I just mentioned, and also because with our knowledge, we'd be able to decrease most of the expenses that Blower Wind has. We'd be able to apply our knowledge for the future, for the acquisition. The following is our opportunity statement. By acquiring Blower Wind Farm from Wind Movement, your wind energy will be able to expand its operations internationally with relatively low risk due to first mover advantage. By undertaking this project, we will be able to yield a net present value of $62 million.
Thank you. So I will go further into the analysis of that project. And first of all, we need to tell you that we decided to find the present value of the cash flow and not necessarily the price of the project. We believe that there's a lot of place for negotiation in such a transaction. Therefore, we want to tell you that the present value is basically what you will be able to get from that project, minus obviously the purchase of the PPA. So in our production, I will start off with the production. We know that we will be able to produce 100 megawatts per hour of a total installation capacity, a net capacity factor of 38%, and the turbine availability rate of 96% during the first 2 years, and 97% thereafter. We also take into consideration the decrease in production over time, and after the 17th year, we decrease the production by 1.5% every year until the end of the project at 25 years. So basically here we have a basic overview of our production estimation, starting at 36.48 megawatts per hour, going to 32.34 megawatts per hour at the end of the full project. In terms of electricity price, because we also need to consider the price at which we will be able to sell our product to Hydro-Québec, we assume that we will start in 2017. We did add information that were not the same in French and in English, therefore we assume 2017. Assuming a 2% constant inflation, both in concrete and CPI, we came with all of our price for electricity, starting in 2017 at $113.23 per megawatt. Basically, we can see here that as of 2017, as I said, we have a price of $113 per megawatts, and this will go higher and will reach higher than $180 if we assume the lifespan of the project to be 25 years. In terms of revenue, we assume that the wind turbine will be running 24 hours a day, 365 days a year, because we took into consideration the availability rate, which we assume that took into consideration the fact that some turbine might not work, that someday there might not be wind, and all the other factors, which came up with the following revenue. As you can see, they will reach more than $500 million in 2041. In terms of construction, we assume we were giving some information in terms of how often of the proportion of the investment that we will need to make into the construction costs. So the first year will be 14%, thereafter 23% and 63%. We assume an 85% debt to value ratio. That gave us $5.9 million the first year, $9.8 million the second year, and $27 million the third year. So in terms of discount rate, we took the cost of equity, we found it at 5%. In order to do so, we took the average unlevered bid of the comparable companies of the industry. We assumed a risk-free rate of 1.294%, and as well as a return on the market of 5%. We found also the cost of debt to be 4.99%, which makes sense because this is a very levered project, therefore the debt is really risky. We used a simple cap-in formula to calculate both of these costs. I will now let Shadi to continue with the free cash flow to equity.
So now that we've got the free cash flow to equity, we want to look at the different assumptions. So firstly, we have the operating expenses of 18.93% of revenue. And in the information provided in the case, it stated that the company or the project that we would be wanting to undertake, which is a blower wind one, would have similar cost and similar expenses to the one that we currently have in Denmark, which is the Denmark wind farm. And so we use the same percentage or proportions of the revenue and came up with the various operating expenses. And now we also have a debt payment of 18.8 million. So we just did a simple amortization table in which we have our constant payments of about 18 million, and then we're going to have we have our beginning value of 242 million, which is the money that we would need to take in order to actually invest in the project. And then looking at basically the past rates that we found in terms of the debt itself, we were able to find the interest and eventually getting values. And so we came up with eventually that after the 21 years, we'll be able to pay off all of the debt itself. And so now we have the free cash flows to equity. So now we've got essentially in the first 3 years, those are the investments that we're going to be doing. And then after that, these are the revenues based on the prices that we had determined beforehand. And so we've got the debt payments. And so these are the 18 million debt payments that we have that are going to be constant over the course of 21 years. And then we've got the interest tax shield, and so the interest tax shield, essentially we just took the interest rate that we assumed a certain tax rate of 35%, and we were able to find this tax shield. And eventually we got these free cash flows, and then discounted back at the rates that we had calculated of the 5%. And so these are the discounted cash flows. And so this yielded to a present value of 62 million. And it's important to know that whatever project we do undertake, as long as those costs are lower than 62 million, we're going to have a present value that's going to be above zero. And because the cost of the investment is actually only 42 million, we see that we actually have a profitable project by investing in the blower wind farm.
So now I would like to cover something that didn't need necessarily a presentation. Mainly the way we will approach this new company in Quebec in this new market to sell us their PPA, because they do not have to. We believe that the best way would be obviously to be friendly as much as possible, to work with them. They will obviously have different valuation and negotiation will take place. This is why we did not feel comfortable giving an actual definite price, because we know that the two parties will have different vision of the future cash flow of the product. We also know that this company will usually resell their wind turbine, their wind project, after a few years of operation. So we also need to take into consideration the increment in demand for wind power, for greener power, because as you all know, the electricity in Quebec is produced mainly by water, which is sometimes really damaging for the environment. This is why we believe that there's a lot of space for wind energy, and that in future year the resale price could be even higher than our prediction. And I will let Shadi conclude with the key takeaways.
So just to sum up our entire presentation, we believe that by acquiring blower wind farm, we would be able to expand our wind energy into international operations, so mainly into Canada, as it is really starting to evolve in terms of renewable and sustainable energy. And so it's also relatively low risk because it is growing now and it's only expanding now, we have a relative first mover advantage. And in addition to that, we do have the SPVs that if this project were not it's not as profitable as we envision it to be, then we would still be able to protect all our other assets and all our other projects because of the SPV. And then, so by undertaking this project, we're going to be able to yield an NPV of $62 million, and therefore we believe it's profitable and a good project to undertake. Merci beaucoup, and thank you.
Can you take me to the slide where you show the discount rate? Okay. Okay, did you use the cost of debt? Basically, the discount rate is your WACC? Is that what you used to discount your...
Initially, we were going to use WACC as our discount rate.
Okay.
But then, because we decided to use the free cash flows from equity, we decided to discount it by the cost of equity.
Okay. Okay, that's good.
We also, in the discounted cash flow, we also take into consideration the 2% inflation rate because our revenue due to the electricity increment in price are taking into consideration inflation. We decided to add it up to our cost of equity.
Okay, but isn't that less risk because you're shielded against inflation? Since your price is 2% every year, aren't you shielded against inflation? Against your cost inflation? Shouldn't you lower it by 2%? Anyway. For your unlevered beta, did you re-leverage your beta?
Yes, so we unlevered, we calculated the unlevered beta from comparable companies. And we re-levered the beta with the target debt to equity. And then finally, it wasn't mentioned in the slide, but then finally we used CAPM just to find the cost of equity.
Okay. Why did you decided to use cash flow to equity instead of cash flow to firm? What?
Because first of all, we knew that the interest payment will decrease over time, which will lower the tax shield. We thought that was more appropriate in the WACC approach that does not take this into consideration. So this method was more precise in terms of this factor.
Very good.
So technically, you're saying I should do this investment up to 62 million?
The purchase price needs to be lower than $62 million.
The 62 million is essentially the present value of all those future free cash flows. And so we can invest, as long as the investment is under that 62 million, we would have a positive net present value.
Okay, so assuming that I purchase the project for 62 million, let's say, and then I need to start my construction phase. What's going to happen? Will I have to inject more equity?
Yes, you will have to inject $42.75 million over the 3 years, which is the addition of these costs. These are not the construction costs by themselves, but the equity investment of the company will need to make in addition to the purchase price.
So when you calculate your free cash flow to equity, did that contribution of 55 million going forward for the construction?
The $42 million?
Yeah, 42 million, did you reflect it in your cash flow?
Yeah, it was subtracted to the free cash flow of equity.
Okay, good.
Did you consider doing a swap for the financing?
The swap, we took it into consideration. We added the cost of the of debt.
Okay. Why did you include the swap?
Because we felt that we would be able to protect ourselves in case that there's changes in interest rates, and we would be able to protect ourselves from that risk. And so the project, when we came up with these values, is more of an accurate number that's also going to protect us from potential risks of undertaking the project.
As well as currency risk, because we will mainly take her debt into Canada, and we know that our company is based in Denmark, so we will be able, depending on what kind of interest swap, we would be also able to shield ourselves relatively against some currency risk.
Okay. Good. We're good.